Hello everyone and welcome to a new ATFX video. In this case, the report is about banks. My name is Gonzalo Cañete and I'm here to share with you quick review on data. Mainly, I'm gonna just share the screen so you will see. We're talking about Citigroup, Bank of America, and JP Morgan. We're gonna review the results present last week. We're gonna also analyze the reaction on the prices of these three stocks based on those results. But we also gonna go to the forecast and estimations for the next coming big banks, the too big to fail, which is Morgan Stanley and Goldman Sachs. Welcome to the report. Please take a seat, feel comfortable, grab a coffee, and enjoy. Let's start with Bank of America. As you can see on Bank of America, we have seen that the result was dropping even lower than the expectations. The expectation was lower than the previous year results, but what we got as a result, it was even half of the expectations. The earnings per share was dropping, respectively from the previous year, 2023, I mean the previous quarter, Q3 of 2023. But by Q4 of 2023 was dropping and even lower than expectations. Really bad numbers. And if you take a look on net income, we can see that actually the net income wasn't so bad. Slightly decline or a stagnation in revenues. Yes, if you check also on December 2021, the end of the year, the result was actually good, around 30 billions of net income. And we can see that the 2022 was not too bad, but still lower than the previous year. So we need to also see the end of the whole year 2023 for Bank of America. In terms of charts, as you can see here, the stock is not doing so bad. It has been close to certain supports in long term. Taking consideration we're watching since 2009, the crash from 2008 to 2009, which it was affecting particularly to financial industry. In this case, we have seen how the tendon was actually doing really well for the last few years. But this is super long term. We need to go deeply in detail to see closer what is going on recently. If you see based on this chart, we can actually say that, well, if you buy between $20 to $25 per share these Bank of America shares, you actually will hold a good asset because probably the price naturally shows us a certain tendency to go to $40, $45, even $50 per share in the future. But what about in the close terms? Well, in the close terms, the picture changes because we can see that actually between $38 to $40 is clear, strong resistance on those levels. And therefore, the movement after the results published last week is showing to us certain weaknesses on the price. It was, again, since last year, the last 2-3 months, it was rising really well, making good supports on $25 per share. But as you can see on the chart, those movements seems to be close to certain big resistance in around $38 per share. And therefore, I will say that, and remember, this is not a recommendation of any kind. I'm just sharing my view with you. But if you want to invest in financial markets better, you consult with a financial advisor. Anyways, my view is in this case, we are close to certain resistance and therefore it's not the best moment to buy this stock, unfortunately. All right, let's go to Citigroup, one of the other big banks that it was last week introducing results. As you can see, in the case of Citigroup, it was also dropping, respectively, from Q3, from 2023 Q3. So the Q4 was, in the expectation, it was a drop on earnings per share for the end of the year. But the good news is they actually did better. The EPS present last week, it was actually better than expected. So that was a positive message. It's a positive sign for those ones who hold this stock. In terms of net income, as you can see, was dropping for the last 2-3 years. So it's not the best news for the company because we can see that actually the net income has been declining. Good profit sharing, but Citi incomes have declined over the last 2 years. What about the charts? Well, on the charts, clearly, on long term, you can see that it's actually, again, clear resistance around $50 to $53 per share, as you can see on the chart. Anytime we pass $50 per share, we can see that there is certain tendency of new sales attack those levels. New sales orders start to come into the market also on those levels. But let's take a look closer on short term. As you can see, the evolution was so nice. If you will see the last 6 months of this stock, you actually will believe that it's actually a bullish company, bullish stock, a bullish trend. Clearly looks like that. But if you take in consideration the previous levels achieved on early 2023 and the end summer, let's say on 2022, you can see that clearly we are in resistance. And those resistance are right now not in the best moment, because we can see that, generally speaking, the Wall Street market, the SP 500, for example, is making a clear lateral movement. It means like if we are actually facing resistance in general terms in Wall Street, Bank of America could get certain drops on the price, could get certain corrections to $48 per share, for example, even lower than that. So again, therefore, cautious. We will say that in this case, hold and watch what happens. If $50-$55 are breaking up and consolidate the next seasons over those levels, maybe it's a good reason to start to buy. But so far, if we see that the price is making lateral movements, watch out, because clearly we got 3 historical resistance on those levels. Now, JP Morgan has dropped also, again, another one, on the expectations of the incomes, like sharp fall below expectations. As you can see, in this case, it's not so sharpy, but it's again dropping below the expectations. And the expectation was lower than the previous quarter, Q3. So from Q3 to Q4, it was dropping the earnings per share, but also the expectation was higher than actually the real results presented by JP Morgan last week. Now, the clean annual net income, as you can see again, it's another bank that has been declining their net incomes from one year to another. And in terms of charts, we can see clear resistance in around $170 per share, 169, those levels. So that in the last 2-3 years, anytime we get close to those levels, it was long and important corrections. As you can see here, for example, in 2021, by summer 2021, the correction was taking so long, almost 6 months, dropping the price and about $60 to $70 correction on the price. Now we're facing exactly the same scenario right now. Let's take a look on the closed terms, and oh, hello. Can you see this? It's actually showing us that the price was doing really well, and that big candle over 160, it was almost touching 180, it was $175, $76 per share. So this is one of the examples that you should keep on your radar, because JP Morgan got the chance to consolidate the price over $169 per share or $170 per share. In that case, we can actually make our bets for JP Morgan as an exception in the financial industry so far. Okay, but only in that case. And as you can see, today, the day I'm recording this video, is Martin Luther King Day, so the Wall Street is closed. But tomorrow probably we're gonna see certain movements in this price. And remember, we are also gonna give you the forecast for the 2 biggest investment banks, which is Goldman Sachs and also Morgan Stanley, for tomorrow. All right. You got the forecast, Goldman Sachs, Morgan Stanley. Let's go into details. Now, starting with Goldman Sachs, some recovery in the last periods. We have seen how the price was actually Q2 of 2023 was a massive drop, respectively with the previous period. Q3 was certain recover, and in line with the expectations, you can see both lines expected and actually results completely in line, one with each other. The expectation for Q4 is a drop on earnings per share, but still we have to see what happens now, because so far we have seen is like probably best scenario is a certain EPS close to the expectations. Worst case, dropping from the expectation, but we are not expecting something higher than that. Last quarter earnings was introduced in 17th of October last year. It was $5.46 per share. Now the estimation is $4.27 per share, and it's going to be introduced tomorrow, 16th of January. The revenue estimate is around 10.96 billion, and the one for the previous period, which it was again 17th of October last year, it was 11.8 billion. So again, expectations show us clearly drops on earnings per share. In terms of charts, let's see what the price is discounted for the results of Goldman Sachs. We can see clear resistance in around $380 per share, and we also see that the maximum records recording on 2021 for Goldman Sachs was actually $415. Around those levels was the maximum top record for this stock. Therefore, we got two clear big resistance on the chart above the price, the current price, and I will say is more ambitious opportunity for shorts than for longs. But let's take a look on short term. And actually, on short term, you can detect very common supports below those levels: $360, $340, $320. All those levels are obviously the next zone. So if you are looking for a short position, as you can see, Goldman Sachs is giving to you clear signals of resistance. Therefore, you can hold a short position for maybe like $100 down. But if you're looking for long positions, here you got clear support areas to take your long positions in strategic levels. Remember, this is not an advice. I'm just sharing my view of the market with you. We are not providing any kind of advice. And if you want to invest on markets, my advice is, in any case, that you should contact a financial advisor first. Now, Morgan Stanley, expectations. Well, as you can see, the revenue, the earnings per share published on Q2 and Q3 last year was actually really similar. So let's say that worst case, the results present tomorrow for Morgan Stanley is going to be around the estimation, which is lower. It's around $1 per share, 120 maybe, but nothing in that, and hopefully even close to 150. Let's take a look. Last year, 18th of October was the last results for Q3, and it was $1.41, $141 per share EPS. And now the expectation is $1.09. That's the expectation, that's the estimation for 16th of January Q4 on Morgan Stanley. Total results last quarter, Q3, it was 13.27 billions. Results expected for Q4 is 12.82 billions. So again, Morgan Stanley is showing us that the estimations are giving that very modest EPS for the common next period, with this Q4 2023. And as you can see on the charts, long term, so clearly also a downtrend plus the resistance we have seen in Goldman Sachs. Same scenario, clear resistance, but in this case, we also see a downtrend, lateral runs, trending down to the $70 to $75 per share. If we take a look closer, as you can see in long term, we will see that targets here are between $75 to $70, even $58, $57, $25 per share. So completely bearish market based on this chart. If we take a look closer on short terms, we can see that the last 2-3 months has been spectacular, super good for Morgan Stanley on the market. But still, right now, the chart is showing to you clear corrections after those resistance, and it seems to be moving to at least $84 per share. That's the move showing to us the chart. Okay. Well, I think that's all, because you got the long term, you got the short term, and you also got the fundamentals for these two companies, plus you got the analysis done for the previous 3 investment biggest banks in the world from last week. If you like these videos and you want to also request any particular stock, any particular asset you would like to analyze, please contact me. You got also my contact here. You got my contact and my email. Also, I'm doing a newsletter every morning, so if you want to join my newsletter, you just need to send me an email, and for free, completely free, I'm gonna add your email to my newsletter if you want to receive a quick macro update of what is going on for the last 24 hours on global markets. My name is Gonzalo Cañete, and if you like this material, this content, please subscribe to our channel. See you. Bye-bye.